Welcome to another S&P 500 analysis. Today is August 1st, 2021. Last week, the S&P 500 presented us a couple subtle messages. In this video, we will look at those messages along with the price action of the indexes, the sentiment, and the market internal to see what to expect in the coming week. In addition, we'll look at some of the sectors' performance relative to the S&P 500 and see what sector to focus on. Stay tuned. Looking at this weekly chart of the S&P 500, we noticed last week is one of the smallest range in the last 7 weeks or so. So this is a NR7 type of a candle. Although it was negative, last week the range was only a little bit over 57 points, and it lost 16.5 points or 0.37%. But nevertheless, the price is still doing a one-time framing up and also is above this 10-week and the 40-week moving average, and both of these moving averages are up. So on a weekly basis, the trend is still up. Now let's take a look at this sentiment chart here. Notice the VIX closed at 18.24, so the market participants are still relatively complacent. But we did see the put-call ratio came up in the latter part of the week and closed at 0.69, although it's still under 0.75. But definitely the market participants are getting a little bit risk off. And for the up-down volume ratio, we noticed on Monday when the S&P 500 closed at a new closing high, the ratio was 1.13 in favor of the up volume. And on Thursday, we noticed that it did not close with a new closing, all-time closing high, but it did put in a new intraday all-time high. The up-down volume ratio was 1.9, so it's almost 2 times in favor of the up volume. But on Friday, we did see a slight pullback on the S&P 500, and the up-down volume was minus 2.48, so it's a little bit less than 2.5 times in favor of the down volume. But also the other thing to note is the advanced decline, the daily advanced decline on Monday when it closed with a new all-time closing high. Vancer led the decliner by 467, but on Thursday the Vancer outnumbered the decliner by 1,339. So it is a improvement on the advanced decline comparing from Monday and Thursday relative to the performance of the S&P 500, in which Monday it closed with an all-time closing high, while on Thursday it is a little bit underneath the all-time closing high. But on Wednesday, when we saw the S&P 500 actually close down a bit, we did see the advanced decline was positive, and it led the decliner by 843. Likewise, we saw the up-down volume ratio was positive at 3.39, almost 3.5 times in favor of the up volume. So we are seeing a little bit of a positive divergence on Wednesday. And looking at the New York Stock Exchange new high, new low, we did see on Friday the new 52-week high outnumbered the new 52-week low by a margin of 154. Notice on Tuesday, while it was down, the S&P closed down. The new 52-week high was 25 more than the 52-week low. But again, looking at Thursday, notice that Thursday it was 179 more new high than new low, versus on Monday it was only 56 more new high than new low. So there is a little bit of improvement in terms of the new high, new low, relatively comparison on Monday versus the Thursday performance. Looking at this cumulative AD line for the New York Stock Exchange, we notice that there is a little bit of a positive divergence now. Remember, originally we were looking at this negative divergence here between this Monday all-time high and this AD line here. But now, if you notice on Friday, we actually have a little bit of a higher high on the AD line here, and there is a lower high for the S&P 500, and also you can see that there is a lower low versus there is a slight higher low here on the AD line. So we are seeing a little bit of a firming up. One of the subtle message that the market is sending us to tell us that things are not what it appears to be on the surface, because I think, a lot of people are still very bearish, although we probably will see a little bit of a pullback in the near term. But also there's another sign, another message that's telling us that we could also see another new high from the S&P 500. And we will discuss that a little bit more later on when we take a look at the price action of the S&P 500 in a little bit more detail. And looking at the Nasdaq market on Monday, the Nasdaq 100 put in a new all-time closing high and also closed with a new all-time closing high. The up-down volume ratio was 1.4 in favor of the up volume, but we did see a negative divergence with the AD, the advanced decline. The decliner actually outnumbered the advancer by a margin of 543. So we are seeing a bit of a negative diversion on Monday from the AD. But on Wednesday, it actually came up. And remember, Wednesday, the S&P 500 was actually down, but the Nasdaq 100 closed up, and the up-down volume ratio was actually almost 3.9 times in favor of the up volume. And the advanced decline was 1,925 more advancer than decliners. Now, on Friday, it did close down, but it closed near the high of the day, and the up-down volume ratio was almost even at 1.06, and the advancer was trailing the decliner by 981. And for the new 52-week high versus 52-week low for the Nasdaq market, looking at the Monday number, we actually saw more new low than new high. And there were 35 more new 52-week low than 52-week high, while the Nasdaq 100 made a new all-time closing high and also put in a new intraday all-time high. So that is definitely a negative divergence here on the new high, new low. Then looking at Tuesday, you see that spike down. There were 181 more new 52-week low than 52-week high. And also on Wednesday, while the Nasdaq 100 came up, we still see a new low outnumber the new high by a margin of 2. So it is an improvement, but there is this negative divergence here in the first half of the week. But on Thursday, while the Nasdaq 100 did not put in a new closing high or came up to test the new all-time high, the new high actually outnumbered the new low by a margin of 109. So we are seeing a improvement here. So once again, we seem to getting a little bit of a mixed messages from the Nasdaq market in terms of the divergence, because we did see a little bit of a negative divergence on the up-down volume ratio at the early part of the week, similarly on the AD, and now we're also seeing that on the new high, new low. Looking at the Nasdaq cumulative AD line, we still seeing this negative divergence between the Nasdaq 100. So we are still watching this negative divergence and waiting for it to get resolved. Now, before we go and take a look at the S&P 500 price action in a little bit more detail, just want to bring to your attention here on this possible double top for the near term. Notice on Monday, it closed with a new all-time closing high, but on Thursday, it failed to close with a new all-time closing high, but it did put in a new intraday high. Remember, we have said in the past that close is what matters, right? So right now, we essentially are looking at a lower high, and this could form a little bit of a double top for the near term. Right now, basically, we saw this on Friday. It closed with a lower low as well. So we could see that it might come down and check this level here. And this level is closed at 4,384.63. So keep an eye on this level here, this close. And if it closed below this level, we could see a possibility of a price action similar to this area here, that we might be able to see this pullback to somewhere around this 4,300 level in the near term to test this trend line. Let's take a look at the price action of the S&P 500. Right now, we are looking at this daily chart of the S&P 500. Essentially, are looking for a little bit of a pullback and see would it come down to this 127 level. because we're looking at this particular trend line here and see would it be able to come down to this trend line and get a bounce back up and take out this all-time high here. There is a market message that telling us that we could see a new all-time high on the S&P 500, and I will go and show you that message later on. So for the upside, if the market do decide to push up next week, then we're essentially looking at this 200% extension somewhere up at 44.52 area. And if it break through that, we could be looking at this 4,500 level as a possible target, or a psychological target. So that's basically what we are looking at for the coming week. Looking at the Nasdaq 100, as you can see, the Nasdaq 100 closed with a new all-time closing high on Monday. Then we had a big down day on Tuesday, and notice the Wednesday, Thursday, and Friday, these candles here, well inside of this Tuesday candle. So keep an eye on the low on Tuesday's low. If break below this low here, we see this pullback come down and possibly come back down to test this 100%, this 14,073 level, and also in breaking down this trend line here. So that's basically what we're going to keep an eye on for the downside in the coming week. And then on the upside, if it does come up and take out the all-time high, then we'll be looking at this 1618 extension up at the 15,233. And for the Russell 2000, the Russell 2000 had a strong week last week, and you can see that it is staying above this trend line, also staying above this 2195 area. We're still waiting for this thing to see would it be able to come up to this 2297, or at least come up to take out this pivot high near the 2283.5. So if we could take out this high, then we might see it move up toward this high here at the 2360. But if it dip below and break this trend line once again, then we'll need to keep an eye on this 2195. See would it be able to hold support, and if it doesn't, we're still looking for this thing to work its way back down to this 2075. The Dow Jones Transportation did show a little bit of a bounce last week. It did hold above this 14,242. So we'll see would it be able to come back up and reclaim this 15,000 level, and see would it be able to work itself back up to somewhere around this 15,400. Essentially this support turn resistant. But if it breaks below the 14,242, we'll probably see continued weakness to work itself down to this 13,656. And for the Dow Jones Industrial, price action is very similar to the S&P 500. As you can see on Monday, it came up and put in a new all-time high and also closed with a new all-time closing high. And on Thursday, it put in a new all-time high on an intraday basis, but it did not close with a new all-time closing high. So you can look at the on a closing basis, it's very similar to the S&P 500, that it is putting in a little bit of a double top here. And if the price break below the this pivot low here next week, we could see a little bit of a pullback coming back down. And if I zoom out here and take a look at this potential trend line connecting these low, so you can see that it could come down and test this 34,000 level if it decides to pull back to test this trend line. Now, if it break below this pivot low, then we could see a move down here to test this 33,000 level. So the upside is continue to push up and put in a new all-time closing high on all-time high and come up to this 35,500 level. And looking at this ETF, the SPY for the S&P 500, notice that there is a gap on Friday and also this high volume node here. So next week, we could see it come up and fill this gap because of this high volume node. And maybe it will move itself up to a new high, or possibly just fill this gap and then get a push down. Now, right now, the price is sitting right near this composite point of control somewhere around 439. And if it continue to move down, the first level that we're going to see would it be able to hold support is this 436. And this is right here at this low volume zone here. So if it doesn't get a bounce or rejection, then we're essentially looking for this to come down to this composite value area low at 433.90 and see would it get a bounce off of that level. And if it doesn't, then we're basically looking at this 432.34 as another potential level of support. And for the QQQ, the ETF for the Nasdaq 100, we also saw this gap here on Friday. Right now, the price is sitting above this composite volume profile point of control here, just above the 363.61. So we'll see, would it be able to come up and fill this gap and test this 366.60. Now, if it could get above this low volume zone at 367.63, we could see that it might move up toward this value area high and possibly come up and test the all-time high here. But if it pulls below, dip below this composite point of control, then the first level that I will be looking at for potential support will be this 362.28 in that area. And if it doesn't get a bounce here and it break below this value area low, then we'd be looking at this 360.87, this low volume zone here, to see would it be able to hold support and get a rejection back up inside, back into this value area. But if it decide to break below the 360, then it could work itself down to this huge composite point of control at 354.56. And this composite volume point of control is this huge swing here from May 19 to the present. And we see that there is this point of control right here near the 354.50 area. And looking at the Russell 2000 ETF, the IWM, you can see that there is this point of control here, this composite point of control, somewhere around 221 area, 222 area. Right now, it is just slightly underneath this point of control. If it continue to move itself down, then I'd be watching for this value area low here, somewhere around 215.59. You see, would it be able to get a bounce off of that level? If it doesn't, then I'd be keeping an eye on this low volume zone here, down at 214.45 level. Now, on the upside, if it could get back above this point of control, then be watching for this value area high at 225.72. See, would it be able to get above this value area high? And if it does, then I'd be watching for these low volume zone be tested to see would it get a rejection or work to it and make its way up to this 232 level. Looking at the 10-year yield, as you can see right now, it's still kind of bouncing up near this 1.25 area here. So we'll see, would it make its way back down and test this 1.2 level and possibly even come down to this this low here near this 1.13 and see would it be able to get a bounce back up. But if it stay above this 1.25 and chop around, then I could see it eventually it might work itself back up to this 1.4 area. The US dollar is trying to hold above this 92 level here. It seems like it might want to come down and retest this 91.24 this zone here. So keep an eye on the US dollar. If the 10-year yield is gonna come down a bit, then we probably will see the dollar come down as well. But if it decide to bounce and get back into this zone, again, we're basically looking at this 94 level and still keeping our ear and eyes open for this 93, 93 and a half to get the Fed come out and start talking the dollar down. But right now, the dollar seems to be pulling back a bit. So we might see a little bit more pullback as the 10-year yield also come down a little bit more. And we could see this 91.25 level could possibly be tested for potential support. And since the dollar pulled back a bit, we also see the crude oil price come up a bit. And we're going to see what to be able to get back into this zone here and possibly come up to this 77 area once again. Silver had a nice bounce on Thursday off of this 2470 level here. And right now on Friday, got a little bit of an inside ball. So we'll see what silver continue to bounce back up to this 2667, or we'll come back and retest this 2470 area here to see what to be able to hold this support. So again, we're basically still looking at a slight downtrend here. So unless it could break this trend line and come up to this 2667, still we have to watch for the potential break of the 2470 area and possibly make its way back down to the 2272 area. And similarly for gold, gold also had a nice bounce on Thursday, but it did have a reversal inside ball on Friday. So we'll see what it be able to hold this 1804 level. Remember, we've been watching this level and see what it come down and make its way back down to this 1700 level. So we'll see what it be able to break this inside ball on the upside and come up and test this 1846 level and maybe find resistance there and push us back down to retest this 1804 once again. So that's basically what I'll be watching for gold is on the upside, this 1846. And if we could break through that, then we're basically looking for the possibility of come up and break this trend line here and work its way toward the 1923. But if it unable to break about this 1846, then I'd be looking for another test of 1804 and possibly break that and work itself down to this 1700 level. Now, looking at the heat map for the S&P 500, we notice that Amazon took a big hit on Friday because of their earning guidance from Thursday after Thursday close. We did see some strength in the semiconductor sector here, although we did see the Tesla came up. But again, the financial was quite weak. And also the energy sector and utility were showing a little bit of weakness on Friday. And for the Nasdaq 100, we did notice the semiconductor sector show some strength. And Amazon took a big hit because of their earning guidance. And it was down a little bit over 7.5%. You can see a lot of the large cap tech stock was under pressure on Fridays. Now let's take a look at some of the sector relative to the S&P 500 ETFs, the SPY. First, look at the index. We're looking at the Dow Jones Industrial ETF, the Diamond, and we see that it is relatively flat. So it's basically performing along with the S&P 500. And for the Nasdaq 100 ETF, the QQQ, it's also kind of flat as well. So basically, it is not outperform or underperform the S&P 500. But if we look at the Russell 2000, the ETF for the Russell 2000 IWM, it was underperformed, but right now it seems to be coming up from its low here. So maybe the IWM is making a turnaround. And comparing this to TLT, the long-term bond, it is kind of flat. Also for gold, we notice that it is coming off from its recent low, come up a little bit. So it seems to maybe making a little bit of a turnaround. So we just basically have to keep an eye on it. But recently, it's been underperformed the S&P 500. Similarly for the silver, you see that also recently it was underperformed relative to the S&P 500 until recently it's kind of come up a little bit from its low. So maybe it is trying to make a turnaround similarly to gold. And looking at the industrial, see the industrial has also been been down recently, but right now it's sort of making a little peak from the low here. The transportation sector is still relatively weak. Now for the utility did show a little bit of a outperformance recently, and it is kind of flattened off a little bit right now. On Friday, we did see a little bit of a weakness on the utility. So, but overall, the near-term trend has been slightly up. The financial, we saw the financial been weak, but right now it seems to be flattened out. So maybe it is trying to make a turnaround here. So keep an eye on the financial. And for the technology, after the recent outperformance, we seem to looking at a little bit of a flat performance here relative to the S&P 500 recently. Now the semiconductor was kind of flat over here and then underperformed a bit. And right now, notice the last week or so, we saw this strong outperformance coming up in the latter part of the week here. And notice the SMH, the semiconductor ETF, actually closed with a new all-time closing high and also put in an all-time high on Friday. The healthcare sector also closed with a new all-time closing high and put in a new all-time high last Friday. And you can see that it has been outperformed the S&P 500 recently. The energy sectors also show a little bit of a firmness right now. It seems to be flattened out from its recent underperformance. So maybe we will be looking at the energy sector coming up. Now for natural gas, recently it's been strong, but right now it seems to be flattened out. So maybe natural gas is setting up for a little bit of a pullback. And here looking at the oil, see the oil was quite strong and it came down a bit recently in the early part of July. And right now it is coming back up. So we did see a little bit of an outperformance relative to the S&P 500 recently. So we'll see what this trend continue. And we are looking at the ETF for the material, and seems like it is coming up, and it is doing a little bit of an outperformance relative to the S&P 500. Notice that recently it's been underperformed. So right now it seems to be making a turnaround. So keep an eye on the material. And also the home builder is also seems to making a little bit of a turnaround. Showing a little bit outperformance relative to the S&P 500. For the retail ETF seems to be flattened out. And look at the discretionary, the consumer discretionary. It took a little bit of a dip here. So maybe the stimulus money is running out. So kind of keep an eye on this discretionary to see what the consumer sentiment is in the near term. And maybe it's getting back to a little bit of a reality. But the consumer stable is holding steady. Now let's take a look at this market profile chart for the E-mini S&P 500. I wanted to show you that this message here from the market telling us here at this poor high here made on the 29th of July. That tells us that there's a possibility the S&P 500 will make another new all-time high when the E-mini S&P 500 come up and tag this poor high and get it resolved. Now, will that happen next week? It might not. We don't know because there are a lot of unfinished business down here that the E-mini S&P 500 could come down and get it resolved next week on some sort of a pullback. So we'll see. But bear in mind, there is a possibility here that from the market telling us that we could see another new all-time high for the S&P 500 in the future. If you find this video to be informative and useful to you, be sure to smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.